In this video, I want to talk about the PFS momentum tool and setting it to a more responsive rate, going down on a bit of a lower time frame where I can see a lot more of the cycles of price, and there's a heck of a lot of cyclical action in price with all the good fun games we're getting out of the institutional side. So are these settings here AI optimized? Nah. It's kind of like, I played around with the settings a bit to what I'm used to. And will I AI optimize this type of a setup? Of course I will. It's kind of on the list. I'm right now optimizing. I'm spending the most time on the trend bias first. I've done a little optimization work on the momentum tool for a range of uses, so I kind of know where the ballpark is. But let me just show you an example. So right now I'm on a Renko of a box size 5, which is like the lowest I would ever go. And let's talk about that for a second. 5, 6, and 7, you're going to see the more cyclical, more noise of price, and that like 8, 9, 8 is like leaving where you're seeing a lot of like tight cycling of price that starts to dissipate some. And then 9s, 10s, and 11s, that stuff like almost completely disappears, where this will look more linear and less cyclical in nature. And a move like this, even though there's a few little oscillations on the way down, will look very smooth. I don't want to say smooth, but just means it looks more linear in nature. So it's like you have some up, some down, some up, some down, some up, down, up, down, and the cycling dissipates more and more the higher the time frame you go. So it just depends what your objectives are. Now here's a way to look for really quality setups throughout the day for the manual traders, which a lot of traders are manual traders. So here's some patterns you can look for. Notice how the momentum indicator here, we are getting a divergence with price. And then what I look for is the actual moving average overlaid on top of the indicator, reading the indicator, breaking through basically the zero line. So if I look at that moment of time where it's breaking through, let's put a vertical hack right there. And let's look at what's going on with price at the time. So we'll dial that in. So right there. So right there, it's hitting the zero line. And you can see we've come out of a divergence. The indicator went lower, price went higher. Where's my drawing tool? Okay, it's hiding up there. So lower, divergence. We get the rollover, and the momentum starts trading and breaks through what I'll just call the center line. It's not really the zero line in this case because of the scaling, but it's the center line. Okay, here we have a pivot, lift. That's not a divergence. That's just showing what happened with price. But we make a big leg up, consolidate for just a little bit. Then we make a secondary push, and then it rotates down and it breaks right through here. So that's right about in this area price, somewhere in here. Then we have price from this pivot down to this pivot to this pivot, and we start breaking through right in here, kind of right in this area price. Here, the market grinds higher. Now this is pre-market right here. This is during the EU session hours, especially at 2 a.m. So, not surprising. It's lifting. It's like I can't even tell you how many nights lately, like the last 2 weeks. As soon as the EU market starts, it's pretty much you can be assured it's going to go up. Sometimes they'll do a little fake out and then just grinds, or sometimes it really gets going. And then it pauses, and then sometimes leading into like 6, 7 in the morning, 7:30 U.S. Central Time, it'll accelerate even more. So, but anyhow, you can definitely use the indicator to look for divergences and then zero line crosses. I like to use the moving average, and I have the moving average a bit lagged right now by design, since I've lowered the responsiveness rate, 133.55, and I'm up at a 15. And the line, I made it a 4 thickness, solid line 4 thickness, and so on. So that's just, it's a way to use the indicator to look for divergences. So here's the divergence. We started to cross the zero line right here, and the market was, trading lower. And right as we started to lift, we had a little bit of a higher pivot low and some lift. Then we had one more downward kickback after a little bit of lift. You got the downward triangle, pull back, and basically, the divergence kind of continued. We traded almost to an equal low, and then we get the nice big push of the moving average overlaying on top of the momentum indicator coming back up through the zero line, and that one really took off. And that's in US cash session hours. So it's we come out of the open, it's grinding lower. No one can get it lower. We have ascending pivots, and then boom, right in the midst of a divergence playing out between indicator and price. So here's a scenario. They don't always work, so let's cover that. So we definitely had from here to here, somebody might see that as a divergence. And then it crosses the zero line, right in this area price. You get in, but if you get in short and then you get an opposite triangle, there's no need to be short anymore. Just let go. And then the market from here to here, but now we're getting into almost close to 3 o'clock in the afternoon. So it's nobody's going to be working trade setups, especially in a prop account when you're getting that late in the day. So you can definitely use the tool for spotting divergences and then looking for shifts in momentum out of a divergence. And, as far as time frames go for the MNQ, you can look for divergences on a 5, 6, 7. Those seem to be really good time frames. If you go up on an 8, 9, 10, or 11, you're going to be looking at the big picture move divergences. You get lift, and then you get pullback, and you get a higher high. It might play out over a 4-hour period of time, and you see a big divergence, and then it rolls over. Still works. It's a different, it's kind of a different level of play out. This is more like you're getting in to grab a quick piece of a move and then get out. That's something like you're getting in and you might be in the trade. Trade might run for you for hours. It's a little bit different overall perspective. So anyhow, that's another way. Now you can also, and I'll have videos on this, you can also use the indicator literally. There's ways that you can set up this momentum indicator where you lag it a bit, but you're down in a lower time frame, and you can literally just trade the zero line crosses of the indicator itself. So right now I have it a little bit too sensitive to do that, but that's kind of its own approach. I'm going to shoot that in a separate video. I'll probably shoot that one tomorrow. That's another very effective way. And it's not like when you get the zero line cross, you don't have to go in with a lot of contracts. You can go in 1 or 2, and the moves tend to have, a pretty significant amount of price movement out of them. And there's a super high percentage where you get a good amount of movement initially, where you can at least get your stop to break even plus, and then if it starts running away from you, great, and if it comes back, oh well, you get stopped out at break even plus and wait for a new setup. But you can do that on lower time frames, so you can get a lot of zero line cyclical signals of momentum throughout the day, you might have 4, 5, or up to 7 really good signals throughout the day. Now that's something that AI, looking at the momentum tool, and I can tell the AI, hey, go look at the MNQ on a 5 Renko. Dial that baby in for zero line crosses. Okay, next. Okay, now look at the 6 Renko. Dial it in for zero line crosses. Look at the 7, the 8, the 9, the 10, the 11. My range that I'll be spending most of the time in with AI, at least for the MNQ, will be between 5 and 11 box size. Kind of from, down scalping to the beginning level of what not beginning, but even, into what I would call position trading. So I want to look at all the possibilities there. So more ways you can use the tools. This is a really good tool for interpreting the strength of momentum and how strong, trending action is, momentum. Well, it also is considering cyclical action. So as soon as a market cycles, it will have less importance to the indicator on how much it's above the center line. So even though the market's grinding upwards, if it gets cyclical, the indicator doesn't like that. The indicator likes to see linear movements to really keep accelerating away from the center line. Just like that. That's a very prominent move. The whole time, the indicator, the green portion, is staying above the moving average. That's a high momentum environment. So anyhow, there you go. That's one way you can use the indicator as you're, working other setups to pay attention to divergences where there might be more significant momentum shifts that play out. Big bursts of momentum, consolidates a bit, secondary burst of momentum. That momentum now is dissipating. Market starts rotating, zero line area break, and now the momentum completely reverses and changes directions. Then momentum starts decelerating, get a zero line cross. Now momentum starts the other way. So the indicator does a good job of, upside momentum, break, downside momentum, break, upside momentum, break, downside momentum, catching the shifts of momentum, the structural shifts. And a lot of these structural shifts happen as divergence is playing out in the momentum indicator. And those seem to have the most snap to them when they break, the ones that have divergences building. Okay, there you have it. If you have any questions, just send an email to info@propfirmscalping.com, and I'll shoot another video on just zero line crosses with the indicator itself, not the moving average, or you can take the moving average and dial it right up against the indicator. You could set it to like a 5, so you can, or a 3, and you can wait till you can call out the indicator plot, the moving average crossing the center line as your mechanism to be a signal for the AI instead of the actual indicator itself. Like you might say, put this down to like a 5. It'll be very responsive. Okay. Hey, Claude AI, when the moving average is above the center line on a bar close, that's my long signal crossing this way. When it's below, that's my cross, Now go optimize and tell me which one gives me the least amount of flips per unit of time and the overall best equity curve if I get in on every one of those with X amount of contracts, X amount of distance for stop, reward at least 2 times, just some generic bracketed setup so you can see start getting dialed into where the sweet spots are, and then you can do more finite analysis from there. Okay, there you go. There you have it, and more ways to use the PFS Prop Firm Scalping Momentum tool.